A world of Trump 2.0. Now, every portfolio manager, every investor is now asking the main question. What does that mean for the investor portfolios? What does it entail for the different asset classes?
Absolutely.
So let's begin with the equity markets. Now,
Okay.
when Trump won the presidency, markets welcomed the news, and never mind markets singing, "Here comes Santa Claus, here comes Santa Claus," which, by the way, that might happen later on this year. Markets seem to be cheering, "Here comes Donald Trump, here comes Donald Trump," right down stock market's lane. The S&P 500 rallied 2.9% since post-election on November 5th, as of yesterday. In our view, however, we believe that the stock market performance will be uncertain, and we'll highlight a few points as to why we believe that's the case.
Welcome to another episode of the How Canada Works podcast, brought to you by Cherry Hill Private Wealth, part of Harbourfront Wealth Management. My name is Adrian Blake. I'm with Trevor Miller. We're investment advisors with Cherry Hill Private Wealth. Trevor, how are you doing today?
I'm doing great, Adrian. It's a Friday. Lots of great plans today. So, how about yourself? How's your Friday treating you?
Yeah, doing well. Working hard on a Friday afternoon. I'm very excited about this conversation with Sylvanna, though. Sylvanna Asia is one of our portfolio managers on our Watermark private portfolios team at Harbourfront, the brokerage that we represent to the public. And there's been a lot that has gone on the last little while with the election. And I'm looking forward to Sylvanna's approach to investing over the next couple of years with Donald Trump as a president. There's a lot to think about, and I'm looking forward to hearing her out on that.
Yeah, absolutely. It's, we get caught up in the noise a lot of times. And you and I had a conversation not that long ago, pre-election, on, what was going on and what does it matter, things like that. But I think, now that we do know who the incumbent is, and another noise, right? There's this new stimulus thing happening in Canada. We've got a lot happening in Ukraine and Russia, Middle East, and, so much happening. And, what I love about our portfolio team is just their ability to cut through that noise and, give us the actual pieces that matter. So I'm really excited to talk to her. So let's get her on here and see what Sylvanna has to say about kind of this new world that we're living in and what we should be looking at.
Yeah, absolutely. I've had a bunch of email conversations with Sylvanna. I think one phone call. This will be the first time I've actually had a real face-to-face, as much as you can, over the internet conversation with her. And so, looking forward to it. Let's do it.
Wonderful. Well, Sylvanna, thank you so much for joining us here today. Like you said, first podcast. We're pretty thrilled to have you here and honored that this is the first one that you're doing. So welcome.
Thanks so much. Thanks, Adrian. Thanks, Trevor, for having me as a guest on your podcast. Hello to all our viewers. As you've said, my name is Sylvanna Asia. I'm one of the portfolio managers here at Harbourfront Wealth Management. So let's just dive right into it, I guess, right?
Perfect.
Yeah, you got it.
Exactly.
So a world of Trump 2.0. Now, every portfolio manager, every investor is now asking the main question. What does that mean for the investor portfolios? What does it entail for the different asset classes?
Absolutely.
So let's begin with the equity markets. Now,
Okay.
when Trump won the presidency, markets welcomed the news, and never mind markets singing, "Here comes Santa Claus, here comes Santa Claus," which, by the way, that might happen later on this year. Markets seem to be cheering, "Here comes Donald Trump, here comes Donald Trump," right down stock market's lane. The S&P 500 rallied 2.9% since post-election on November 5th, as of yesterday. In our view, however, we believe that the stock market performance will be uncertain, and we'll highlight a few points as to why we believe that's the case.
So Sylvanna, I got a question for you. So as things were coming down on the 5th or the 6th, it's all been a bit of a blur to me at this point. When I'm looking at our Y charts, it's just like ticking along and then just like skyrockets as soon as we know with pretty good cause who it's going to be. What was the reason for that? Like, why did the stock markets act so favorably towards Trump? Was it Trump specifically and what he's talked about doing? Or was it more the fact that now we know, it was going to be so close, a little bit of volatility, markets don't like that, and now we know somebody? Or was it Trump? Like, where did that land? Or do we even know? Or is this kind of...
It could be a little bit of both of what you're saying,
Okay.
leading into the election, the market sort of already priced it in. And I believe there was like about a 60% chance of him winning. That's what the forecasters were saying. But essentially, it's like when he was campaigning, Trump's main goal was to he wanted manufacturing to come back to the US
Right.
to create more job growth in the US. So he campaigned about several initiatives about tax cuts and deregulation. Tax cuts effectively that will help bring more income for taxpayers. They keep a little bit more in their pocket and then they decide, hey, I have more for savings or I have more for investments, or they have more disposable income so they can then decide, do I want to spend more? All of this is very it helps and fuels the economy. um he also talked about deregulation. Now, deregulation typically lowers the cost of operations, and it incentivizes more entrepreneurials and businesses to enter the market at a lower cost. That also could lead to increased economic growth. So all of these things are good factors that typically translate to higher corporate earnings and should typically eke into higher stock market prices.
Okay, that makes sense. That makes sense. And was the Harris side not talking as much about that? I guess this was more of Trump's side, I guess, in its overall. Yeah.
That's correct. That's correct. But we believe that perhaps the market has bought into it, leading up into the election. And as we noted, after the election, the markets rose about 2.9% as of yesterday.
Right.
So we believe that maybe the market had bought into all those initiatives, but we all know that what administration says might not essentially be, can they really deliver that? So there's a lot of uncertainty there, and that's why we keep highlighting the word uncertainty in the stock market.
Wait, are
Now,
you telling us that politicians don't tell the truth, the whole truth, and nothing but the
no, I
truth?
can't comment about that.
Okay, all right, just checking. That sounds crazy to me.
We'll keep going with uncertainty, right? Yeah.
Yeah, uncertainty. Okay.
Yeah. So the next point I essentially want to highlight about Trump's initiative, he uh, uh, what could potentially hamper the stock market performance and bring stocks down is that he released a new initiative called the Department of Government Efficiency,
Mm-hmm.
DOGE, which aims to cut the federal government down to size and increase government efficiency. We believe that DOGE could significantly cut government spending. Now, that's a concern, and it could potentially impact stocks in a negative way. Why do we think this? Well, we think it's a concern because of two main reasons. Job growth in the last 18 months has come from government jobs. It's estimated that there's about 3 trillion US federal government jobs. Now, even if you take away half, that's nearly 1.5 trillion. That's a lot of jobs.
That's a lot of
Um
jobs.
that's a lot of jobs. And the second point is, economic growth. Economic growth has been a result of running a deficit and also the increased government debt. So these are two main points that sort of could potentially bring down the stock market.
So when it comes to cutting that many jobs and whether they're able to do it or not, I know that's kind of their mandate is to really break down, the government oversight in a lot of places. We've heard some different areas where it's very possible that they're going to cut first. But when we look at this, typically when we start cutting government jobs, there are public sector jobs that will become available and created because of this. But there is always a bit of a lag time. Is that really what we're worried about? Is that all of a sudden we're going to have a bunch of people that are unemployed, What Musk has said is it's going to be a couple year payout on this. So they will still be able to have some purchasing power. They're not being kicked out of their houses. They will have a pretty good severance. But then at some point in time, they're probably not spending the same. They're probably not purchasing as much because of that unknown. And customers don't love that as much. And there has to be some job creations coming from that. Is that kind of where the concern comes from? Just that unknown?
Yes, that's correct. Okay. Yeah.
What about talking about tariffs? Like it seems to be the topic of the day. Obviously, Trump campaigned on a significant and broad tariff against everything that comes into the United States. And from what I understand, there's some question of how possible it is to even implement a strategy like that. And then, of course, the consequences of it, and whether he's able to do some or all. Obviously, the volume of consequences will change. What do we think is actually likely to happen here, and who's going to potentially benefit or lose out?
So again, like I said earlier, perhaps they might be over promising, but we believe that there will likely be tariffs. Some tariffs, maybe not all that they're promising, but essentially, a consumer now or a consumer or a business now has to weigh the costs. And they're faced with this question: is it cheaper to buy from foreign countries, or is it cheaper to do business locally in the US? And an increase in tariffs, that would essentially increase the price of imports, and that would likely lead to more businesses being done domestically. And that's typically good for US corporate earnings. Now, tariffs, however, could be very inflationary. So with inflationary pressures, that would definitely impact how central bankers decide to do what they decide to do on their next policy meeting.
Yeah, so that could really, we've seen some issues with inflation, and that was a big thing that Trump was running on was how we've had the highest inflation that the world has ever seen. I think was maybe not a direct quote, but I think it probably summarizes what he said there at least a little bit. So if we're getting back into an inflationary perspective here, what does that mean for what the Feds have done on lowering it? Are we looking at them probably pausing it for a while, or is there a chance that they're going to raise the interest rates again? Is this something that we're keeping an eye on?
Yeah, that's something definitely we're keeping an eye on, and we have our toolbox that we monitor on a daily and periodic basis. Again, like I said, it's very uncertain, and the central banks, the U.S. Federal Reserve, they will rely on the data that comes through. So each month that if it trends towards their target inflation rate, perhaps that would increase the likelihood of a rate cut. But as of now, we're just monitoring the inflationary pressures that are still seen in the market. To add on to that point, another risk in the world is the geopolitical tensions. It's still quite high, right? Now, one of the things that he campaigned about, that Trump campaigned about, is that he promised that he could end the war in Europe between Ukraine and Russia in one day, in 24 hours.
I love the look on your face as you're saying this, where it's I can tell you fully believe that this is the likelihood of it.
So yeah, that goes back to my point. There's still a lot of uncertainty surrounding the topic and how he will even achieve that goal, right? But if he does manage to achieve that goal and lessen the tensions globally, well, that could fuel stock market. If not, that could again hamper and create some volatility within the stock market.
And kind of going on some of this global political strife that we're seeing, especially if we're looking at in the Middle East when it comes to oil supply and some different pieces with that. If I believe, and correct me if I'm wrong, that Trump in his first go around really made a conscious effort to bring oil and that side of it back into the U.S. Does this have any impact on what he would do on that side? Obviously, we don't know what he's going to do because I don't think he's even 100% sure what he's going to do. But if does that play into it at all with what's going on in the Middle East and kind of a new regime here?
It's hard to say. It's hard to say. But again, um, what I've read, at least out different research pieces I've read, at least, is if Trump wins, which he has won, um, he would bring back drilling, and that would essentially increase the U.S. oil supply, and then therefore a higher supply in oil would bring down the price in uh, the commodities. So with that, we're just monitoring essentially how that will play out within the commodity market.
Yeah, and that was something Adrian kind of mentioned when we were talking about the lead up to the election was kind of the inverse of production and price, right? Adrian, you're kind of
Yeah, when you're talking about a commodity, obviously supply and demand factors in, right? So if you increase supply, you also reduce prices, right? And so, yeah, I guess that's what I was getting at.
yeah, which is different than what people would expect on the stock market, right? Apple sells more phones, their price would likely go up, right? Whereas we produce more oil, cheaper, better, price goes down.
That's right. Yeah, exactly. So, Sylvanna, I think there's we talked about pre-election, we talked about volatility in the markets and how the VIX tends to increase and there's more likelihood of volatility coming up to the election because of just the uncertainty of the outcome in the election itself, right? And generally speaking, I think markets and therefore companies that make up the markets appreciate clarity, right? They want to know what direction that they can go in with their business and who is the president may have an influence in that. And so it's, the uncertainty goes away once you've elected the president. Except that inherent in a Trump presidency is a whole bunch of uncertainty around what happens next, because like Trevor said, I'm not sure he knows. How are we supposed to know? And so how do you invest and steward clients' assets into the uncertainty of a president like Trump? There's certain opportunities there. There's certain risks there. I'm not sure any of that is well defined. How do you manage that?
Yeah, to summarize, yeah, like you said, there's a lot of uncertainty in the world, but yeah, it's true that one of the risks of the presidential election is now over, and we know who won. While Trump's initiatives sound great for U.S. job creation and corporate earnings, we still believe markets might have bought into it leading into the election, and we'll still see uncertainty going forward. So we believe that's very important for investors to be mindful of these inherent risks that are still in play in the stock market. One, geopolitical tensions are still high around the world. That is inflationary. Two, U.S. debt is still high and increasing. That hasn't changed. Three, the U.S. equity market is right now it's not cheap. It's pretty expensive on the valuation end compared to its long term average. So I'd like to quote what Warren Buffett, like a good quote that I like to live by. And he says, it's only when the tide goes out that you learn who has been swimming naked. Ironically, I love swimming too. So, but in other words, things may look good and rosy for everyone, but when the tide goes out and something negative shocks the financial market, you will really see which manager, which investor is well prepared, well equipped. So yeah, I thought it's really good to. I thought I'd throw in my own quote as well. Uh, I thought I'd throw in my own quote to incorporate for investing, and I thought I'd be clever enough, but I wasn't. So I asked ChatGPT, my best friend, and they came up with reduce the risk, avoid the strife, diversify to thrive in life, and that's essentially what we have been doing as a team here at Harbourfront. We ensure that our clients portfolios are well diversified with different asset classes, and they're holding companies that produce good quality earnings. And that's sort of how we'll be investing, navigating all around all this uncertainty going forward.
You kind of touched on two things in that I absolutely loved and wanted to go on a little bit more. We've talked about what it's doing in the U.S. and how Trump's tariffs and outlook on what he's looking to do for the U.S. economy. But how does that trickle into the rest of the world? Because obviously the markets aren't just the U.S., although they are one of the larger or the largest market in the world. How does that shape up for Canada? Like, are we in trouble, or is this good for us? And I guess around the world, like, is there something we can take from this globally?
Yeah. So for one, Canada right now, I believe we're seeing some sort of stagflation occurring in Canada. But essentially, like with the U.S. dollar, if Trump is aiming to bring back U.S. growth and increase corporate earnings in the U.S. stock market, what does that mean for the U.S. dollar? Well, he'll he'll want the U.S. dollar to stay low, so that it means that foreign investors have more buying power, and therefore they'd be incentivized to buy more U.S. goods, because it'd be cheaper from their perspective. Um, with respect to Canada, if the U.S. dollar goes down, that means for us, I'm based out in BC, but for us, it would mean the Canadian dollars would appreciate. It doesn't really matter what the politics are. Going back to my earlier comment, it really just depends on how the economy will perform, in whether it's Canada, U.S., Europe, doesn't matter, Japan. The long term effects is we gotta just keep monitoring the economic environment in those countries.
That makes sense, because when I was thinking about the Trump for Canada, or for the Trump for Canada, the Trump for U.S. side of things, I initially just kind of thought that would mean stronger U.S. dollar and all that. But if they're producing things and not having it come from other places, then obviously they become more of an exporting country that wants other countries to purchase from them. So that makes sense that they would try to keep that U.S. dollar down a little bit.
And I love the approach you're taking there, like the comment about diversification and different asset classes, because I know on the Watermark team that you work on, like part of what is exciting about the work that you do is the inclusion of the private market securities that Harbourfront offers, right? And so I know we have private credit and a private real estate and private equity fund, and there are others as well. But when you think about the markets and the way they're priced, I would argue that one way to think about pricing is the kind of intrinsic value of the business, what the future opportunity is of that business, plus greed minus fear. And so the market gets pulled one way or another, depending on whether most of the market is greedy or whether most of the market is fearful at any given time, right? And then in the private market securities, you have cooler heads prevailing in the valuation of those businesses. And so you get a whole lot less of the fear drag or the greed pull on those securities. And so by including the private markets, you are therefore diversifying a bunch of the volatility and the risks that exists in the market. Can you talk a little bit more about some of the what the point is, how you do that, and maybe some of what we do at Harbourfront?
Yeah, so I'm glad you actually brought that up, because I forgot to mention the other asset class, a very important other asset class, public fixed income. Now, the very goal of a public fixed income is to provide stable income, and hopefully it doesn't fluctuate greatly for investors that require and rely on that source of income. But right now, like you said, we're seeing the impact and of fear and greed, and we're seeing a lot of volatility in the bond market right now. So the public fixed income isn't really doing its job by providing that stable income. So what we do for our clients is we look to other alternatives. What other income stream is providing that stable income, and we do so through private credit and private real estate. Private credit is expected. We're expecting that it would provide a 6.5% return, and for private real estate, 8% return for the year.
For 2024?
That's correct.
And does that do anything differently, or are we looking at the private side any differently under Donald Trump, or is it going to be the same thing?
Yeah, we continually monitor it, and as banks become a little bit more stricter, it offers. We find the private credit space still very attractive, but in terms of private real estate, Trudeau talked about potentially stopping or limiting or cutting down immigration, but we still recognize that there's still huge supply and demand structural gap in the housing industry or in the housing market. So that doesn't really change under the who's in place. We like to essentially just take out the noise and look at, is this still a good asset class to be invested in?
Yeah, and that's definitely hard to do with all the noise that's been around this over the last little while, is to have the discipline and the ability to look past, Trump versus Harris, or what Trudeau is doing today, or that list is seems pretty long right now, to go through that discipline of evaluating, picking what it makes the most sense for today and going forward without all that noise. And I think what you guys do is pretty special, and our clients definitely thank you for it. I definitely thank you for it, because I'm having such great conversations with my clients when markets are down, like what we saw in 2022. We were in a much better position, and we weren't having those awkward conversations. So look forward to all the great things that you guys are doing going forward.
Before even the election, a lot of advisors were already asking our opinion. What would it mean under? What would happen? What's our outlook on the stock market or portfolios if under Harris or under Trump? And we went back to them and essentially gave them we shared our views, but research has shown that it doesn't. There is more statistical evidence coming from, if the economy is healthy, is corporate, if corporate earnings are still growing, is it profitable, stock market valuations, all these economic variables are more so a better prediction of the stock market rather than who's in office. So yes, it does play an impact, depending on what they actually enact on their initiatives or their policies. That will sort of sway certain sectors. So whether it be healthcare, uh, and again, the commodities. So there's more sector plays that is being directly impacted by these government policies. But overall, as an asset class, we look to kind of remove the noise and just go with the is Canada's economic environment good? Is the U.S. and we sort of build off of that.
That makes more sense than what I think a lot of regular investors do when they just take a look at some of those fancy headlines or the scary headlines. And we've seen this, whether it be the financial, was it the fiscal cliff that was happening a couple of years ago? That was a big nothing. And there's just so many of these things that come up and are just noise for papers. And, Trump is going to do this and Harris is going to do that. And at the end of the day, Adrian and I have had this conversation a few times, whether it's Trump or Harris, Apple is gonna keep making phones, and Nvidia is gonna keep making their chips, and businesses will still be profitable if that, like you said, that economic landscape is still in a good place.
Favorable.
Yeah.
Correct. Yeah, that's bang on actually. Yeah.
So, Justin Trudeau and the Liberal government just recently released their, I don't even know, is it a stimulus program? Is this what we're going to call it? The $250 that they're sending out to the majority of Canadians. I think if you make under 150,000 is kind of the number. You file your taxes this year, that you get a $250 paycheck, plus you get we're going to hold off the GST, and I just wonder if we've done so much work on getting this inflation down. Is this going to contribute to inflation? Is that what we're seeing with this, or does this change any outlook on the Canadian economy? It just seems inflationary to me. It seems like something that is not necessarily in the same line of what we've been trying to do the last 18 months with bringing inflation down, or 24 months, or it feels like a long time.
It could be the case that it would provide some more consumers to then spend because they got that extra money in their pocket, and therefore inflationary. But again, like when we're deciding, is Canada an attractive place to invest? What we like to do is look for trends. Not one data point is not going to tell us. And just like Trudeau, this one stimulus check that they announced, this one thing does not mean that, hey, this is the trend. Uh, our team continually looks at the data, just like how central banks do month over month, and we like to see, is there a trend? Connect the pieces. Is it trending higher? Is it trending lower? That sort of thing. So it may provide some inflationary, but again, we got to see more data that sort of solidifies that view.
No, and that's wonderful, and I think that just goes back to kind of our conversation with, you're not just looking at the headlines and just making those decisions. And I think that this is what, a lot of people miss when they work with a team like yours, is that a lot of us are really knee jerk with our own money, right? We see something and we're really like, that's the best deal ever, and we want to put money on it. And usually that's already priced in. Or we go, this is scary, and we want to pull money out. And, a lot of times, it's a headline, or it's not something that really impacts things in the same way. So to have, you and your team sitting back there and have a look and go, okay, let's see what the actual data is. Sure, this is something we need to keep an eye on, but let's take a look at what it actually means, and all the other data around, does it support it or does it not? And I think that's something that, gets missed a lot of times when people are like, I can just do it myself. Yeah, but you can't for the most part, right? It takes a lot more time. You have a full team that is looking at this stuff, 24/7. I don't need to tell you how often you're probably sitting in front of the computer looking at all the data sets, and it's just it's not something that most people have the time or ability to do on a regular basis.
Yeah, so and that's a great point that you mentioned as well. Like, I work in a team of three. We manage about 1.9, close to about 1.9 now, 1.9 billion in AUM, assets under management, and um, that's the biggest thing. We work in a team. It's not just me deciding, hey, I want to buy this or I want to sell that, right? Like my the way I interpret one thing may not be correct. I need a team. We need each other essentially to say, "Hey, this is what I see. Is that what you're seeing too?" And we every day we have a conversation about it. Our team is very active on these discussions, and we review it. Uh, Almost every day while we watch the markets, and we share our thoughts. We're not afraid to say, hey, I don't agree with you, or yeah, I think I'm seeing the same thing you're seeing, right? So and to your uh previous comment, like you said, investors investors tend to see the news, or like and then what happens is that they want to get into the trade because they're whatever the news is, they're excited about it, right? Like right now, in 2023, I believe I believe it was the beginning of 2023, and now we're close to end of 2024. It was all AI, right? Like all the companies, they, even though you could have something as silly as like a sock making company, they're talking about AI, like all these little things, and any mention of AI was just like boom, um, an increase to the stock mark market prices. So eventually, what we see happening is, you know, all these companies that claim that they're an AI company, um, just like in 2000, all the .com companies, they will it will consolidate to the best companies, and the best companies will be the ones remaining going forward. So what tends to happen is that that trade, the AI trade, it stretches like a rubber band, right? And what happens if you stretch a rubber band this much? What's the impact?
Eventually, it snaps back.
Yeah, but if we stretch it that much, then the impact is much greater, right?
Right.
And that's essentially what what we want to highlight to all these to all clients. In 2024, what we've seen is that the markets have been led by concentrated mega cap stock companies, right? Um, it's only until maybe September, and I believe uh, either early August or September, where we started to see some rotation out of the tech and rotation to banks, the different sectors, banks, healthcare, utilities. Now, some of them, healthcare has been not performing that well, but uh, around like I believe in September it was doing really well, and banks continue to go up, utilities continue to go up. So we're starting to see sector rotation now. Again, like I said, um, couple months we like to monitor and see the trend. Is this gonna sustain, or is this a one off? And then back we go again into tech. Every month we're reviewing this. Every day we're reviewing this. We try to look to the market to see, is there any signs that, hey, is this is the market topping out on tech? Could this rotation be real to more of the value stocks? That sort of thing.
I'm not sure if there's anything else that you wanted to ask, or Sylvanna, anything that you had on your mind that we didn't get to cover, but
I think you guys covered it all. Yeah, I think I touched on my main points.
Well, then, Savannah, thank you so much for coming out and participating with us. We really appreciate it. Great work on your first podcast ever. You were awesome. And thank you for sharing the thoughts, your thoughts, and the Watermark Private Portfolios team thoughts around what's going on in the market over the next 4 years under Trump presidency. I think long short of it is who knows, but I appreciate that we have your team stick handling that for us, so that the Trevor and I of the world can focus on the clients and the financial planning and the tax strategy and the behavioral finance and the decision making that the clients control. And so we really appreciate your contribution in terms of the portfolio and the investing for our business.
wonderful. Thank you so much. Well, that was awesome. I always love talking to our portfolio management team, and like you kind of mentioned at the onset of this, this was also my first time really having an in-depth conversation with Sylvanna. Talked with a few of the other PMs, quite extensively. I've always loved reading her commentaries on a monthly basis, and get a lot of insight into what they're doing on the back end. But obviously, just having that conversation with her and seeing where their head's at and how they manage portfolios is really enlightening, and it instills a lot of confidence in that team from my side.
Absolutely. I think it's going to be a tricky 4 years to manage money for clients, because you do have the competing idea that it just the individual president isn't really that important.
Mm-hmm.
But then also the policies that they may or may not be able to enact could be significant to the economy in one way or another. And so there's lots of moving parts for sure. I appreciate that there's a multi-person full-time team to do this kind of work for us, in addition to what we can provide for our clients. Like it really does feel supportive and fantastic as far as I'm concerned.
I totally agree. And, Adrian, this has been awesome. I know your kids are home on a PA day. My dog just came up to say hi, and I think he wants a walk. So, it being a Friday and everything, thanks for coming in here and doing this. And man, it's been a lot of fun just having that conversation with Sylvanna and really picking her brain on this. So go hang out with the kids. I'm gonna go take the dog for a walk. Have a great weekend, and we'll chat again shortly.
Enjoy your weekend.
Take care.